All right, so it's Friday, February 6th. There's no jobs data today because of the recent partial government shutdown. And full disclosure, your girl has hurt her jaw muscle. So talking is not super fun, but we got to see what the markets are doing, right? So I am going to proceed with looking at price action, market timing, momentum, moving my mouth about this much, and we'll dive in. So let's look at the E-mini S&P 500 futures. What I want you to really kind of hone in on is that we have not been able to clear the October 31st high or the October 10th low. So we've been consolidating big picture for longer than it may even seem. Today we're getting a bit of a recovery, but I don't know how far up it will go. I'm going to take this to a 60-minute chart for a moment. And I think that we may get a little bit more upside, but I really want to see clearance above the kind of 6950 level to suggest that we are getting back to recent highs. Otherwise, I think that if we turn lower, so going back to the daily chart, then the next downside target would be the range from November 21st. So the three levels on it are the old high, the middle, and its low, all right? So that's my take for the ES. Let's look at the NQ. Similar story, except the NQ has been weaker than the ES. So it has pushed much further below its January 21st low and already returned towards its November 24th low. So it hasn't quite dropped down to that level, but it came real close so far today before recovering. So if we take this to a 60-minute time frame, again, right now we are getting recovery. I think this could keep going, but if we don't get above the $25,200 area, I think we might be in for a bit more pain, and that could take us to an ultimate test of that November 21st low. And if it drops below that, next up would be the low from September 2nd. All right, last but not least is the Dow. Now, YMH26. Funny, look at how it is consolidating, but currently not near its highs. Well, if you think about it, the E-mini S&P is based off the S&P 500, which is roughly 500 stocks. The NASDAQ 100 is based on about 100 stocks, but the YM, the Dow, is only based on about 30 stocks. So when one of them has an earnings release, for example, recently United Healthcare had a release and it didn't do well, so the whole Dow tanked, right? We could be seeing a similar thing, but to the opposite side here, that one particular stock is doing well today and it's carrying the average. So this is not uncommon if you trade the Dow, so you really need to be attuned to, if you trade YM futures, what are the current Dow components and how are those companies doing. That being said, let's zoom in on the action. Same consolidation story. So we've got the January 13th high in this case and the January 2nd low. So it's not as big and wide of a range as the other two indices. We're obviously up near the high. Let's go to a 60-minute chart. And yeah, I don't see why we wouldn't go and test the high and possibly make new ones before experiencing any weakness. If there is weakness though, before posting a daily closing break above the January 13th high, then I would watch out for a pullback potentially towards today's current low, so the $48,700 area. So that's a little look at some key levels to monitor over the rest of this session. And as the early next week unfolds, we'll see how earnings continue to play in. And then when we start getting some of that delayed economic data as well. So if you found value in this video, useful look at futures, some reminders of how to look at your technical levels and more, go ahead and hit that like button and I'll catch you in the next video.